Hello everyone, welcome back to my channel where we talk all things real estate. Today we're diving into the top 5 mistakes real estate investors often make. These are the pitfalls that can really trip you up, but don't worry, I'm here to guide you. We'll keep it straightforward and easy to understand. So whether you're a seasoned investor or just starting out, grab a seat, get comfortable, and let's make sure you're equipped to make smart, informed decisions in your real estate journey. Alright, let's jump right into it. The first mistake to avoid is ignoring local market conditions. This is a critical error that can cost you dearly. This is like showing up to a game without knowing the rules or who you're playing against. You gotta be in the know. Imagine trying to play chess without understanding how the pieces move. You'd be lost, right? It's crucial to understand what's happening in your specific area. Is it a buyer's market or a seller's market? What are the average property prices? What's the rental demand like? These questions are the foundation of your investment strategy. These factors play a huge role in determining the potential profitability of your investment. Ignoring them is like trying to sail without a map or compass. Think of it like this. Every neighborhood has its own personality, its own vibe. Some are up and coming, some are established, some are all about families, others are attracting young professionals. Each of these characteristics can significantly impact your investment's success. You need to know what's driving demand in the area you're considering. Is there a university nearby? A booming tech sector? Maybe a new shopping center or public transportation hub is in the works. These are the things that attract renters and buyers. Understanding these drivers can help you predict future demand and make more informed decisions. Remember, real estate is all about location, location, location. This age-old adage holds true no matter where you are investing. Don't just jump into a deal because it looks good on paper. Do your homework. Research the area, talk to local real estate agents, attend open houses, get a feel for the pulse of the market. This groundwork is essential. Trust me, the more you know, the better equipped you'll be to make a winning decision. Knowledge is power, especially in real estate. I've seen firsthand how crucial understanding local market conditions is. It's not just about numbers, it's about the story those numbers tell. I remember this one time a client came to me wanting to invest in a luxury condo in a quiet suburban town. They were excited and ready to dive in. Now, on the surface, it seemed like a good deal. The numbers added up, the property was beautiful, but something felt off. It was a gut feeling that something wasn't quite right. So, I dug a little deeper, and guess what? The town had a limited pool of renters who could afford those high-end units. The demand just wasn't there. It was a classic case of a mismatch between supply and demand. If my client had gone in blind, they would have been stuck with a property that was difficult to rent or sell. This could have led to significant financial losses and a lot of frustration. That's why understanding the local market is non-negotiable. It's the foundation of any successful real estate investment. Without this knowledge, you're essentially flying blind. And that's a risk no savvy investor should take. Moving on to our next critical mistake, lacking a clear investment strategy. This is like setting sail without a destination in mind. Imagine being out on the open sea, with no map, no compass, and no idea where you're headed. You might end up somewhere, but it probably won't be where you want to be. You could find yourself lost, wasting time and resources. Before you even think about looking at properties, you need to define your investment goals. This is the foundation of your entire strategy. What are you trying to achieve? Are you aiming for financial freedom? Or perhaps you're looking to diversify your investment portfolio? Are you looking for short-term gains through flipping or long-term wealth building through rental income? Each path requires a different approach and mindset. Once you know your goals, you can tailor your investment strategy accordingly. This means choosing the right types of properties and the right markets to invest in. If you're all about that quick flip, you'll be looking for properties with good bones in up-and-coming neighborhoods. These areas often have the potential for rapid appreciation. You're aiming for cosmetic renovations that can bring a high return in a short period. Think new paint, updated kitchens, and modern bathrooms. But if you're playing the long game with rentals, you'll be more interested in cash flow and appreciation. This means looking at properties that can generate steady rental income over time. You'll want to consider factors like property taxes, potential for rent increases, and the overall desirability of the neighborhood in the long run. Schools, amenities, and future development plans can all impact your investment. Having a clear strategy is like having a roadmap to success in the real estate world. It provides direction and helps you navigate the complexities of the market. It guides your decisions, helps you stay focused, and prevents you from getting sidetracked by shiny objects. Staying disciplined is key to achieving your investment goals. Trust me, I've seen investors get caught up in the excitement of a deal without considering if it aligns with their overall strategy. This can lead to costly mistakes. They end up with a property that doesn't serve their goals, and that's a recipe for frustration. It's not just about buying any property, it's about buying the right property. Remember, your investment strategy is your North Star. It should guide every decision you make, from the properties you buy to the markets you invest in. It keeps you on track and helps you make decisions that are aligned with your financial goals. Consistency and alignment are crucial for success. Don't skip this step. It's crucial for long-term success in real estate. A well-defined strategy can be the difference between achieving your financial dreams and falling short. Now let's talk about a mistake that can really sneak up on you: underestimating expenses. This is like going on a shopping spree and only looking at the sale price. You're gonna get hit with a hefty bill at checkout. In real estate, there are always costs beyond the purchase price. You've got closing costs, property taxes, insurance, maintenance, and potential vacancies to consider. It's easy to get caught up in the excitement of a deal and overlook these additional expenses, but trust me, they can add up quickly and eat into your profits. I've seen investors get blindsided by unexpected repairs or sky-high property taxes because they didn't factor those costs into their initial calculations. That's why it's crucial to do your due diligence and account for all potential expenses before making an offer. Get a thorough inspection, research property taxes in the area, and factor in a buffer for unexpected repairs. It's always better to err on the side of caution and overestimate expenses than to be caught short and risk jeopardizing your investment. Remember, real estate is a numbers game. You need to have a clear understanding of all the costs involved to make informed decisions. Don't let hidden expenses turn your dream investment into a financial nightmare. Alright, let's talk about a step that no investor should ever skip: due diligence. This is the cornerstone of any successful real estate investment. Think of it like getting a background check on a potential business partner. You want to make sure you're getting involved with someone trustworthy. The same principle applies to properties. In real estate, due diligence is all about uncovering any hidden issues or potential risks associated with a property before you commit your hard-earned money. This step can save you from a world of trouble down the line. This involves going beyond the surface level and digging deep into the details. It's not just about what you see on the property tour, it's about what you don't see. We're talking about ordering a professional inspection to assess the property's condition, reviewing title documents to ensure clear ownership, and researching the history of the property for any red flags like past liens or legal disputes. These steps are non-negotiable. Skipping due diligence is like playing Russian roulette with your investment. The risks are simply too high to ignore. You might get lucky and end up with a great property, but you also risk buying into a money pit that drains your resources and leaves you with a sour taste in your mouth. Imagine the financial and emotional toll that can take. I've seen it happen time and time again. Investors get caught up in the excitement of a deal and rush into it without doing their homework. They end up with a property that needs major repairs, has hidden structural issues, or is tangled up in legal battles. These are not just minor inconveniences, they can be deal breakers. They end up with a property that needs major repairs, has hidden structural issues, or is tangled up in legal battles. These issues can turn what seemed like a dream investment into a nightmare. Trust me, these situations are stressful and costly. The emotional and financial strain can be overwhelming. Remember, due diligence is your insurance policy in the real estate world. It's your safeguard against unforeseen problems. It's an investment in peace of mind and helps you avoid costly mistakes. Knowing that you've done your homework allows you to move forward with confidence. Don't cut corners on this crucial step. Due diligence is not just a formality, it's a vital part of the investment process that can make or break your success. Last but not least, let's address a mistake that can cloud your judgment and lead to poor decisions: emotional investing. This is like falling in love at first sight. It might feel right in the moment, but it's not always the most logical choice. Look, I get it, real estate can be an emotional roller coaster. You're dealing with significant sums of money, your dream home, or your financial future. It's easy to get caught up in the excitement of a bidding war or fall in love with a property's charm and overlook potential red flags. But remember, real estate investing is a business, and you need to approach it with a clear head and a strategic mindset. Don't let your emotions cloud your judgment. Avoid making impulsive decisions based on gut feelings or getting swept up in the hype of a hot market. Stick to your investment strategy, rely on data and analysis, and don't be afraid to walk away from a deal if it doesn't feel right. Remember, your emotions can be your biggest enemy or your greatest asset in real estate investing. Keep them in check, make rational decisions based on facts and figures, and you'll be well on your way to building a successful portfolio. Thank you for watching. Remember, avoiding these mistakes can make a significant difference in your real estate investment journey. It's all about being informed, strategic, and level-headed. Don't forget to like, subscribe, and hit the notification bell for more insights. Now go out there and make smart investments.